All right, good evening, everybody. Looks like my audio is coming in, I think. Give me a thumbs up real quick, just to be sure. Thank you, thank you. All right, guys, welcome to the Hurley Investments Trade Findings and Adjustments of December 15th. It's good to be with you this evening. What a wonderful week we had last week, and what a nice couple of days we've had this week. Just to give you a peek, across all of the accounts, we're up 756,000 today alone. Yes, Mod, go Baidu and keep going, Baidu, and go some more. How cool was Baidu today? So obviously a large chunk of that was Baidu and Apple and Disney coming back from Monday, going down a little bit. No worries, Mod. It's okay to take a profit. And maybe we'll come back to Baidu. At least you got some still working for you, so you're good. No worries. I had some leap calls in Disney that I sold yesterday. There's always that feeling if I had just held on one more day, but those were awesome, and I made more on those leaps than I did on my stock, partly because I put those leaps on Disney for my own accounts kind of at a fantastic time, make a little more up as the stock came back from the big, enormous coronavirus sell-off in March. But wow, good to see Baidu finally coming back. And the only thing I can really chalk it up to, of course, is the market, and I guess the general positivity of the market since the election. I think is just the fact that we won't have a tweeting loudmouth president that kind of talks first and thinks later. I think the market is viewing that favorably. Yes, it is true. I'm getting some good comments here. What a dingbat. So it's kind of funny because part of me really liked what he was doing to actually kind of take the fight to China and tell them, you know what, you can't just steal our stuff. I just wish he would have done it in a different way, I guess, Mod, the way I would say it to you. Yeah, so I think the market sees it as less uncertainty with the way that Trump seems to tweet things out and talk big and whatnot. That's what I would think. I think things come back the other way as soon as tax increases start, higher tax rates come to light again, because they will. But for now, I think less uncertainty the market likes. And that just got kicked out. Sorry, guys, give me 2 seconds here. All right, back with you. Sorry about that. So Baidu, Disney, Kevin briefly talked about yesterday. I would have talked about it last Thursday, but obviously the big run up happened after hours Thursday night. And I think I have Disney up here. How cool was that? Finally, we get some Disney happening, and that one's been a long time coming, and it still, in our opinion, has much more room to grow. We've talked about, erase that, erase this, talked about how Disney, if it were priced similar to a mod, let me get back to that for if you're referring to Disney or if you're referring to Baidu. So Disney, if we priced it similar to a media company like Netflix, they would be in the $200 range. And we'll certainly see some pullback and push forward and push back up here as time goes on with Disney. Just because now they're overbought and they'll kind of, I would expect them to kind of straddle that overbought back and forth as it continues to kind of calm down and head up slowly or whatnot. So if we priced this like Netflix, it should be up around $200 share, and probably more if it weren't for the drag of the parks and other things like that. But once those come back online, those have made such good money for Disney, and people will be itching to go. It's made such good money in the past for them, so those will all be viewed as positive and help it out as well. But it's certainly nice to see things come around for Disney. Maud, I'll get back to you on that. Let me finish a couple other thoughts. Let's see. I had found this. I'd heard about this downgrade by BMO, this analyst. They had downgraded Disney Monday, which maybe was part of why it was down Monday. Now up again today, but their downgrade was kind of funny. I'll let you read it if it's something you're interested in, but I thought it was kind of ridiculous. I see here that they wrote that Netflix retakes the top pick mantle among the large cap and mega cap and media companies that he covers. To be sure, Disney Plus sub forecasts surpassed the most bullish expectations and were supported by an incredible amount of content, but our favorite story stock closes out this recommended chapter between DTC and investor days. Nevertheless, it's kind of funny. They keep talking about how great everything is for Disney, and they don't really give it a reason why Netflix would be a better pick. Maud asked, do you think Disney will reinstate their dividend? I would imagine they would at some point once they get parks back. I I would bet that's what they're waiting for, and not just opening up, but demand hitting back to pre-COVID levels. That's what I would guess, but I haven't done a lot of research into what they've said recently to comment about that, and that might be more important to learn from them, from Disney directly. So I can't give a total picture of that for you, Maud, but that's what I would guess. Anyways, so it's kind of funny they picked Netflix, which is just still so overvalued. I just had to pull this up. 88 times earnings, 88 PE, and they think that Netflix is the better bet than Disney at this point. Oh my gosh. BMO, you guys are dumb. I'm not afraid to say it. They even upgraded their price, but downgraded their outlook. Maybe so they wouldn't look stupid. But a whole lot of upgrades for Disney recently. I don't know what's wrong with you guys at BMO Capital Markets, but you guys are smoking crack. But that's fine by me. We'll stick by the value of Disney rather than overvalued Netflix. All right. Mod asks, how do you protect the gains now? So let me tell you what we've done. Specifically with Disney, and let me log back in here. I'm going to pause this. Get back on our accounts. Obviously, Mod, I'm going to say something to the effect of using puts to protect. If it's calls, if you have more than 100% return, then take some profit. Take most or at least half of your leap calls, if you have Disney calls, off the table. All right. Okay. Back to all. Let me get down to Disney. Basically, Monday, it was such a big run up, and the reason it was coming down was just simply profit taking, I would think. So this is yesterday, came down to 170, back up today. But around 171, 170 and change, we added protective puts, and we did it in the form of a bear put spread of 170 and on the long side and 150 on the short put side out to January. That out another month, and that just gets us through the rest of this year without spending too much on protection if it continues to go up, and we can continue to roll these up or close them off or whatnot if we need to. But that gives us, $20 of protection, around 170 down to 150, which is a good, healthy spread, just to give us lock into some of those gains in case it, for whatever reason, comes back down at all. So that is going to be my answer for Disney, but it's not a bad idea for some of the others that you might have. I wouldn't go off and protect everything all at once. Just kind of see which ones are holding up and which ones you'd like to protect some gains from. But the story is really just protecting gains, like you asked, like you said, rather. Apple, we're just in shares because we're still bullish and they look really good. Let's see, Baidu, man, they're overbought, but there's no telling where Baidu could get back to in short order, simply because they've been beaten up for so long. And if the trade outlook for China looks at least not as hectic as it was, it's certainly helpful for Baidu, but they've been making money this whole time, even through the whole China trade war and all of that. They were still doing fantastic. So I am choosing to let some of these ones run. Yes, thanks, Mod. They did talk about an electric car this morning. That was, if nothing else, put them in the news, put them on the radar. But I mean, they've got everything. They're basically a monopoly, and all of the state. It's basically a state-sponsored monopoly. A lot of state officials that own Baidu. Okay, so as far as looking at others to protect, we looked at, trying to remember, don't think we did anything with Visa, still kind of letting that play in its range. Same with Under Armour, still bullish. I think it was pretty much just Disney. Check the banks. Yeah. So I guess my recommendation, Mod, is if it's something that's run up, you did a good job taking some profits on Baidu. On Disney, if it's shares, you can look at doing something similar in a bear put spread, just in case. If it's something else that's still looks like it's taken a bullish run, I would wait till you see your first maybe a pullback on a day and either add protection on shares for some portion, meaning a bear put spread, or if it's leaps or options, call options, just simply looking at taking some off the table for profit. That's all. Still don't know if we got our tax sell-off with, you know, a couple of these days here. Blow that up so you can see a little bit. And that's really the negative thing we're looking for, but so not quite sure if we've gotten that little bit of selling for taking profits and for tax purposes that the market usually goes through in a positive year. But yeah, I would just keep an eye on some of the ones that are bullish and start to look at ones you can add bear put spreads, if not bear puts. Oh, Boeing was the other one. I knew there was another one. So we did a 230 long put against a 200 short put for Boeing. See if we couldn't hold on to some gains. Struggled to get over 240 for over a week now. So we thought we should do something. I wouldn't expect it to just fall down out of sight, but it's there if we need it to hold some gains. So that's all I would look at. Something that's made a run up that you'd like to protect some gains. It certainly couldn't hurt. Boeing is just tough because these were expensive. $17. We got $5.50 back on the shorts, but still, that's $11.70 total cost in those. Those are pricey, but seemed worth it to hold on to some of the great gains we've had in Boeing, which has been I think our second biggest. No, Baidu is, well, that's today. Let me look at year to date. Fourth. Number 4. Apple's still our number 1. Baidu was somewhere down there on a break even and has jumped up to number 2. And just in front of Disney, which a couple days ago was number 2. All right, guys. As far as a trade, I kept thinking about maybe looking at a bull call for not Boeing. So used to talking about Boeing for Baidu, but I feel like there should be at some point a little bit of a pullback after being overbought for Baidu. I mean, look at this, it's going parabolic. I wonder if we can't be a little more patient and just see if it calms down for a minute where we can add a bull call type spread or do leaps. I think, yeah, it is extended. At least near term, it's overbought. Hasn't been this overbought in ages, but you can also make the argument that it should be back up at 288, the high from before 2018 when it fell out of sight. But most certainly there will probably be some chances where we can buy in at a pullback. So I'm going to save that one for later. But otherwise, that's really kind of all I had. Unless you're looking at a leap or a year or two out in time, and legging into something like a Baidu or a Disney where you're okay looking at it falling with some profit taking to get in for a second leg of dollar cost averaging those leaps. I would say just be patient. or just look at leaps. I would say out 2 years or so. All right. I'm sure most of you could have guessed that's probably what I would have said. So I'll leave it at that. Not a whole lot much more to say, but guys, that's kind of it for me, unless you had any questions, any more questions. It's days like these that make everything crappy that's happened in the past so worth it. And thanks to you guys for being patient with the process. Sometimes it really kind of sucks to sit through some of these sell-offs, but the money we make up on the way down, the shares we add, it just all works in the long run. And luckily this year we really didn't have to wait very long for that to happen. Sometimes it takes, 2008 took 4 years to get back to break even of 2007 highs. But more than doubling the market this year and being only down 10 to 12% when the market was down 38% is what makes it all work so well. Not seeing any questions come in. Thanks, Maud, for all of your thoughts and questions. Hopefully that was helpful. Yes, I am totally behind adding some protection here and there to take care of some profits, lock in some profits rather. But all right, guys. Hey, thanks for joining me. No other questions coming in. I'll talk to you guys next time and see if we can't make some more money. Take care. Bye.